Hello, everyone, and welcome to the Macro Ace stream with your host, Tony from Financial Juice. Apologies for starting a little bit later than expected, but hopefully you can all hear me and see the video clearly. So let's get right into it with the Bank of Canada rate decision, where the expectation, well, the median expectation is for a 75 basis point hike to 4% from the prior of 3.25%. There's a bit of a mix between either going for 75 or for what some analysts are looking at is they're looking at maybe a 50 base point rate hike from the Bank of Canada. But overall, the majority looking at a 75 base point hike from most of the investment banks. I think it's only Wells Fargo that's looking for 50 compared to everyone else, or a lot of what the others big investment banks are looking at for 75. So first of all, we've got to understand where the economy is at the moment and how that's going to impact the Bank of Canada's rate decision making, and whether they do go for 100 or 75 or 50. All right, somebody's been I think somebody asked me, is the Bank of Canada going to go for 100? 100 seems quite large. Nothing that it can't, it could be a surprise thing that could happen today. It has happened in the past where where we're expecting a 75 from the Bank of Canada, but instead we got a 100 base point hike. So the probabilities for a large rate hike, it's open. It's a possibility, but overall, as I said, a lot of market participants, investment banks, are looking for 75 as a median forecast. Now, where is the economy at the moment? What's going to influence Canada? So, the Canadian CPI, which we'd seen at 6.9% versus 7%. Okay, so if we keep going along, we will see the GDP quarter-on-quarter annualized rate at 3.3% versus 3.1%. The forecast back then was for 4%. The Canadian employment change, we'd seen 21.1k versus a prior of minus 39.7k. The average hourly earnings ticked down to 5.2% versus prior 5.6%. The unemployment rate also ticked down to 5.2% versus prior 5.4%. Retail sales was worse than expected compared to the prior at minus 2.5% versus 1.1%. PPI year on year at 9% versus 10.6%. The raw material price index was slightly better at minus 3.2% versus minus 4.2%. And then if we look at the previous rate decision as well from the Bank of Canada, what they said from their statement. So the Canadian housing market is pulling back as anticipated amid higher mortgage rates. They continue to expect the Canadian economy to slow in the second half of 2022. And also, short-term inflation expectations remain high, according to surveys, and the longer this persists, the higher chance that rising inflation becomes entrenched. So it's an obvious thing whenever you raise interest rates that it's going to have an effect on not only consumer spending, but also on business spending too. And then, the high end of consumer spending, of course, is going out to buy a house, or taking a mortgage out for a house. That's something that's, is a very obvious effect that happens when interest rates are raised. So this is more or less as expected, is what you'd expect from the Bank of Canada. Something you'll probably see in the statement that we get today as well from the Bank of Canada. It's a reiteration of maybe seeing more of a slowdown in the Canadian economy and inflation being higher than their forecast, maybe as well, which would provide them the justification to go with the 75. But if they do decide to say, well, maybe we've underestimated inflation again, which was the last time they surprised the markets with a 100 base point hike. If that happens and they go with a 100 base point hike, then that'll be the key comment to look out for, is that they've underestimated inflation again. But that doesn't seem too likely, for the Bank of Canada to realistically say we've underestimated it again. Otherwise, they would have taken stronger action, a lot more stronger action earlier on after the initial 100 base point hike. So, and that could be with quantitative tightening and what else they can do within the markets. So if we carry on then Bank of Canada views, so on September 20th, you had Bank of Canada's Deputy Governor Burdery saying in order to avoid de-anchoring and bring inflation back to target in a sustainable manner, some have suggested that a significant slowdown, if not a recession, be engineered. So if inflation is getting too high, and you're also seeing that there is the labor market is relatively strong, although of course you have had negative figures with the employment change data for quite a while. The only way to kind of really bring down inflation to control it is to engineer a recession where spending completely falls off, and business spending also falls off as well too. So in that way, it's very aggressive, and it's it's not really surprising that the Bank of Canada would say that, considering what their rate hike path has been in the past. So if they really feel like that the Canadian economy or the Canadian inflation isn't really getting under control or getting worse than they anticipated, then maybe they do need to, go with stronger, or even potentially go with even stronger rate hikes in the future to kind of bring that down. But that's that's one thing that was mentioned by Birdie. By Macklem on October 6th, said that the recent drop in overall Canadian inflation is welcome news, but inflation will not disappear on its own, and price pressures remain high and continue to spread. So remember, we got the Canadian data, of course, the CPI data, we got that on the 19th of October, as well as the latest one. But before that, of course, Macklem, considering that inflation is seeing a decline. So off of the back of his comment there, the market reaction was that money markets had seen a 60% possibility of the Bank of Canada raising rates by 50 base points in October, up from around 50% before Macklem made a statement. So this is why there's the expectation of a 50 base point hike creeping in, off of the back of what Macklem has said in the past. But once the last time we had the inflation data, we didn't see another significant drop from what we'd seen last time around. So that's why traders and banks are considering looking at a 75 base point hike instead, rather than a 50, saying that 50 is we're not at that point where we can start to ease off the brake. We haven't seen a nice continuous we haven't seen big declines happen yet with these mega rate hikes that we've taken. Remember, with any interest rate decision, whether it be a cut or a hike, it takes about a year to take effect in the economy. So we could see later on down the line that inflation is very, very low, but at this point, the Bank of Canada isn't convinced that we're not bringing down inflation fast enough. And this is the only way they can do it, is to put people and businesses off from taking out loans or spending on goods and services. 14th, you had Macklem on recent depreciation of the Canadian dollar against the US dollar, saying that if it continues, we'll have more work to do on interest rates. Again, we've seen that a lot happening, the last couple of weeks, where we've seen Japanese intervention, and then we've seen a whipsawing of the dollar seeing a lot of strength, and then the Canadian dollar seeing quite a bit of depreciation. If we look at the Q3 survey or third quarter survey, expectations for 1 year ahead inflation rose to 7.11% in Q3 from 6.8%, while expectations for 2 year ahead inflation rose to 5.2%. So consumer expectations is for inflation to still be quite sticky, and not anywhere near the Bank of Canada's goal of 2%. Also, consumer inflation expectations in Canada reached a new high, and survey found that majority of Canadians expect a recession in the next 12 months. Something that's, although it's more or less an engineered thing, in a way, they could take that the Bank of Canada is expecting a recession of some sort, although they haven't really explicitly said that themselves as of yet. So that's going to be quite interesting to see if they do mention that in the rate statement, whether or not they do need to engineer a recession. 77% of firms expect inflation to remain above 3% for the next 2 years, down from 78% in Q2. Then, if we carry on the sentiment of views, then, so on Nova Scotia, they see the Bank of Canada hiking the key rate to 4.25% this year. So they were expecting, so this is before, by the way, the expectation changed to a 75 basis point hike at this meeting. Back then, they were looking at 250 basis points. So basically, they're looking at 250 basis point hikes, right? So we go from where we are, from 3.25 to 3.75 today. And then we would have gone to 4.25% with another 50 basis point hike. But of course, that's changed. So maybe it's a 75 that we get to 4%. And then there could be the possibility, if you're saying it's a 25 basis point hike, that's a big jump down, right? It was a big drop down from going from 50 to a 25. So more or less, what had flipped the expectation was the Canadian CPI data, right? So then they said that because of the Canadian CPI data, that it reinforces the Bank of Nova Scotia's HALT underlying details to Canadian CPI update for September, reinforces his expectation that the Bank of Canada will raise its policy rate by another 75 basis points next week, with a hawkish bias remaining. So there's that too. So again, it's the key thing is that the inflation print that we had for Canada was still quite strong. Didn't really see a nice enough depreciation or big enough depreciation. Hence, he's looking for a 75 basis point hike. So the expectation flipped. BMO's Porter said inflation, also on the inflation print too, talking about that. Inflation didn't fall as much, even as gasoline took a big step back. The Bank of Canada's tough rhetoric and weakening the Canadian dollar and the strong likelihood of a Fed 75 basis point hike leads to the forecast of 75 from the Bank of Canada. So not only do you have the Bank of Canada fighting inflation, but according to BMO's Porter, they're also fighting the expectations from the Federal Reserve too. Of course, when you raise rates, that brings up the value of the currency. So if the Canadian dollar continues to appreciate and becomes very, very strong, remember what that means for international trade, right? If you're having to trade your currency into dollars, then you have to trade a lot more of your currency if it's weaker compared to the dollar to get the dollar amount that you want. So for businesses, that's quite a big, and also for consumer spending too. If you're buying goods across from the US, that's a very worrying. That could be, it's a very worrying sign that what some central bankers have said that the Fed is having an impact. Although we already know that they've been having an impact on the rate hiking path for everyone else since they started their rate hiking path. But yes, this is a key point here, that the Bank of Canada is keeping an eye on what the Federal Reserve is doing. Of course, everyone does that, but that the Fed decisions are having an impact on the Bank of Canada and their decisions. RBC's fan said they're expecting 50 with risks tilted to the downside. And of course, that's flipped as well to 75 basis point rate hike expectation as well from the Canadian data. CIBC's Charbonneau, I hope I said that right. Probably didn't. Said that Bank of Canada has clearly not slayed the inflation dragon yet. A seasonally adjusted inflation, excluding food and energy, increased faster than expected this month and now is uncomfortably high. So they also see a 75 basis point hike. But they do say that might lead the bank to do a 25 in December. So here's some of the other investment bank views then. So just an update from what we've seen. So BMO looking for 75, as is Scotiabank or Nova Scotia, or the Bank of Nova Scotia, JP Morgan, CIBC, and Citi. I think it was so Citi was looking at a 50 basis point hike. That could have increased to 4%, but from what I'd seen, it was still around an expectation for a 50 base point hike, 3.75%. So here's how it's going to play out, right? When we've seen the markets, and we'll go through the deviations, usually when the rate has come in line with expectation, you don't really get that much of a market reaction. You get a bit of a whipsaw happening here and there, but you don't really see, the markets going crazy or nuts for it because it's priced in, right? So if we do get the expected 75 basis point hike, we're expecting a bit of, a little bit of volatility on the first candle or so, where you might see a whipsawing going on. But then the markets will kind of just continue their path that they were going down with. If we get something that's higher than the 75 basis point, if we do get a 100 basis point hike at this meeting today, right, another surprise, then that will lead to what we've seen in the past, to the Canadian dollar's appreciation, right? So you'd expect a strength from the Canadian dollar. If you get something that's lower than the 75 and let's say we get a 50, some investment banks are, and I say some, and I mean only not too many, are looking at a 50. But what you would see, the expectation, remember, is for a 75. So if we do get a 50, you would expect the Canadian dollar to see some weakening. Those are the possible scenarios that we could expect from today's Bank of Canada rate decision. I hope that's kind of clear for everyone. BSO, I think Ali Akbar Dreamer said if 0.5 or 1% happens, markets will move sharply. There is that very strong possibility that can happen if it's away from the deviation. Yeah. So that's what could happen. We'll go through what happened in the previous Bank of Canada release, and I'll show this video here for you. But what we didn't really get too much. Anyway, so I'm going to play the video here for you. Okay. All right. So the rate comes out. So there we go, right? There wasn't too much of a reaction from the markets, right? It was very minimal. As said, you did see a bit of whipsawing happening on the initial candle. But again, it wasn't too crazy. Okay. If I keep going, if I go across, and then you see, and then of course you have the rate statement that comes out too. That's also going to be important to keep an eye out for any other hawkish comments from the Bank of Canada. That's also going to be very key. But here we go. Again, wasn't too much of a market reaction. As I said, you did see a bit of whipsawing there, but markets just kind of trotted along, carried on with where they were from beforehand. Okay. All right. So that was the. Actually, I'll zoom in a little bit. That'll be easy to kind of see for you guys. There we go. So it didn't really wasn't that crazy of a market reaction. So that will basically reinforce that if you do get something that's in line with expectation, that you wouldn't really expect too much of a market reaction to happen. Now, if we look at the deviations, what we've seen in the past, here we go. Here's a bit more of a detailed insight into what we've seen. So there we go. The rate came in as expected. Dollar CAD saw a bit of movement. Here at 17 pip move down. EuroCAD also seen, was the biggest mover of what we had seen last time round. So that's something to bear in mind to consider. So there we go. This is where we were looking for 75. We got 100, and you can see how in the case of a 100 basis point hike, we get a much stronger reaction from the Canadian dollar overall, right? And the strongest reaction, which which we've seen was from GBP CAD, which we've seen consistently. GBP CAD has been the strongest reactor to these rate hike decisions from the Bank of Canada, as it was last time around too. So you had GBP CAD, Euro CAD, Dollar CAD, and the Aussie Dollar CAD that were had big reactions, or bigger reactions from the rate decision. So if we do get a 100 base point hike, then you'd expect something similar to along the lines of seeing a lot of Canadian dollar appreciation as a potential scenario. If you see a 50 base point rate hike, then you could see a lot of depreciation from the Canadian dollar instead, and you'll probably see the inverse reaction here. So you probably see, of course, GBP CAD being up instead of being down instead. So that was the previous releases deviations there. Now, if somebody asked a question, will NASDAQ or S&P be affected too? That's something that, to a degree, they can be, depending on what's said. Oh, if there is a surprise in the markets, right, depending on how much the Canadian dollar moves, of course, that's going to affect Forex. And then whatever happens to the dollar will also have effect on the indexes too, right? So if you do see anything from deviation, whether it be rate hike or cut, a bigger than expected rate hike or smaller than expected rate hike, then you could see some volatility creeping into the other areas of the markets. So more or less, you're keeping an eye on everything. But if it comes in as expected, probably won't see too much of a reaction from the rest of the market, other than the Canadian dollar. So that is the prep there. Now I've got my screens already. I've got my EuroCAD, Dollar CAD, GBP CAD. Now remember, with MacroAce, what I'm showing you here, and I've shown you that deviation chart. I've shown you the deviation chart as well of how the release affects the markets, and by what sort of moves do you see? How strong is the reaction? Right, that's what the deviations is all about, and that's part of MacroAce. If you're a subscriber to the mailing list, you get to have access to that, right, as a subscriber, which you can join the mailing list here. So not only do you get access to the deviations for the upcoming economic releases for the week, but you also get a summary of the week ahead of what to expect for the US session, the Asia session, the European session, a summary of the weekend news, and also the releases that we'll be covering for that week as well, right? It's compact. It's not a huge, big old document thing. It's about a couple of pages that you get to have a look at, but it's concise and short enough to be able to kind of tell you what you need to keep your eye on, what you need to know for the rest of the week. Okay, so that's MacroAce, the main list, and also provide the upcoming streams, live stream links as well in that email too. Then we have Financial Juice, so where we're going to be getting the release from and what we're going to be looking at. So Financial Juice, right? If you're not familiar with Financial Juice, live voice and text service, and this is where, of course, if you're particularly, investment banks, they use a live voice and text service because it's an advantage to them to keep an eye out on. Not only they will understand why the markets are moving in a certain direction, right? Sometimes there'll be news or there'll be sentiment shift that will happen in the news or globally that your average everyday trader won't be able to have access to or know about until it's a bit too late, right? To the market reactions, like well ahead of time. It's already done now. It becomes a non-event. So if you want access, or if you want that level of access that investment banks have to a live voice and text service, Financial Juice, right? You can, so Financial Juice, right? So you get your voice service here. You can click on that there. You get your live text here as well in real time. Everything's in real time. economic data as well. It's also in real time as well. If you want to, and also another key feature of Financial Juice, other than providing a live voice and text service on one platform in one area, right, is that you can also, if you're on the pro version, pro or non-pro actually, you can also set your own triggers for the economic release. So what do I mean by triggers? When I say triggers, I mean that, let's say you're expecting a certain figure to appear, and that will, you want to kind of remind yourself, right? To, if it hits 35.9, let's say percent, okay, on something, then that'll be your trigger to buy into whatever you wanted to buy in, right? Or sell, right? So let's say for the Bank of Canada, our trigger to buy, just as an example, not something that we're actually gonna do. We've got about 3 minutes left, Abraham Parler. 3 minutes. So if we're doing an example, let's do 4.25, right? And sell if it's 4.75, right? So you save that, and then you set your own trigger for yourself. Again, those figures that we've put in here are not the figures that we've put in here. They're not they're not us telling you what to do. This is just the forecast. Okay, just to remember that. But yes, that's all in real time. So we've got about a couple of minutes left, or about less than a minute and a half left till we get the rate decision. As said at the top of the hour, this is when we're going to get the rate decision. So keep your eyes peeled. Right, get my tick strike open too. Go per minute. All right. Where are we? My GP code. Okay. 1 minute to go now. Rate decision coming up with the monetary policy report. Remember, the monetary policy report is going to be very key to see how the Canadian dollar will develop post the release of the figure. Okay, 10 seconds. Hike, 50 base point hike, 50 base point hike to 3.75%, lower than the expected 75 base point hike to 4%. So that's a 50 base point hike. Seeing the Canadian dollar weakening here off the back of that data. So again, seeing a 50 base point hike from the Bank of Canada. So again, Canadian dollar weakening here on the market. Let's see what they've said. See, so future hikes will be influenced by assessment of how tighter monetary policy is working to slow demand, how supply challenges are resolving, and how inflation and inflation expectations are responding. They see GDP at a much weaker pace in see 2022 Q2 GDP at 3.3% versus 4% in July, Q3 1.5% versus 2%, and Q4 GDP at 0.4%. What else? Inflation decreasing to around 3% in late 2023 and returning to target by the end of 2024. Right. Also, it's also data looking at some other stuff. All right. So just saying growth cut forecast here. All right. I'll be back in a couple of seconds, my guys. All right, so that is the rate decision there. Again, as seen, Canadian dollar weakened for that smaller than expected rate hike. It wasn't a massive. It wasn't a massive one on the reaction. You're looking for. Well, let's just double check them. Wasn't as I said, some banks were looking for a 50 basis point hike, but even so, would have expected a bigger reaction. So we had, she might be wrong. That's quite big. It's about 96 pips to the upside, right? And that's GP cat. That's huge. humongous. Might just be my eyes. It's about 83 pips. Okay, to the upside, dollar CAD. What we had here, we got 65 pips to the upside there. I think one thing I also want to do is CAD JPY too. I want to see what happened there. Don't want to discredit that. Okay. That was about 65.5 pips or 66 pips down. You want to be kind of precise-ish. All right, there we go. So overall, smaller rate hike than markets expected. Seen the biggest reaction from GBP CAD as it was the last time round when the rate was even came in as expected. The Bank of Canada decreasing their forecast as well for GDP. That's also having had an effect too on the Canadian dollar. So, and also seeing inflation slightly down as well. And then also seeing global growth declining from 3.2%. So a worse outlook, a more dovish outlook from the Bank of Canada. Even though they did go with a rate hike, of course, a dovish hike is what I'd call it here. That's what I'd say here. Who said why euro get more strong? No, it's GBP CAD that had the strongest reaction, pip-wise. Look, it's about 96 pips there towards the upside, and EuroCAD had 83 pip reaction. So that's where you got the strongest reaction. It's more or less it's the Canadian dollar strengthening. Okay, that's what you got to remember. Excuse me, Canadian dollar weakening. Should I say? Canadian dollar weakness is causing everything else to kind of go up against it. So that's the key thing. But GBP CAD had the biggest reaction. All right, so if we're watching tick strike whilst as you can see, there's still some movement happening here. Now, tick strike, what is it, right? What does tick strike do? So what it does, it just allows you to listen to the amount or listen to the order flow and the strength of that order flow too, of the buying or selling momentum, right? So again, a tick strike allows you to listen to the buying or selling momentum and how strong that is. So that's displayed visually with the numbers here on a ticker, or what this is called, and you can also hear it audibly too. I've currently got the audio turned off, otherwise you'll hear a lot of ticking sounds going off, and I don't want to do that because I want you guys to focus on my voice as much as I can get you to focus on my voice. Now, what do these numbers mean? So a plus sign with a number means that there's buying momentum, and a minus sign means that there's selling momentum that's going on, right? Now, what does this number here mean where it says 1 or 4? So you see this dial here, or this little button here. Now, 1 is the most sensitive to market reactions. Okay, that's level 1. So any little bit of buying or selling that's going on, then tick strike will go off, right? Then if you is the least sensitive to market reactions. So only when there's a big amount of buying or selling momentum that's happening, only then would tick strike go off, right? So if you're a day trader, you're scalping your trades, this is kind of like perfect, right? You can capitalize on the momentum that there is within the markets, and of course, use it the way you want to use it. There isn't one specific way to use tick strike. You can use it however you want to use it, but of course, the key thing is with the sensitivity, you can change that up, right? So you don't have to restrict yourself to one level or another. You can kind of chop and change it. So as I said, particularly if you're a day trader, then this is like the perfect tool for you to kind of use yourself. If you're not familiar with what tick strike is, then what we want to do is provide you guys with a 7-day free trial of TickStrike, right? And that will also explain to you what TickStrike is all about, maybe in a bit more detail than I've kind of explained. Have a 7-day free trial, see if it works for you, get to grips with what it means or what it does, before you decide to say, yeah, I want to buy TickStrike altogether. Or maybe you do, maybe you just love it and that's it, you want to take it on. But key thing is try it out, right? See if it works for you or not. Right? We only want to provide you with products that are going to help you, or with your trading during the day, right? So if we kind of look at the more into TickStrike as well. So not only is there forex, but you've got crypto, you've got futures, stocks, ETFs and ETNs, and also your internals as well, right? So you like your VIX, so you can also keep an eye on what the VIX is doing. So if I was to keep an eye on the VIX and see what's going on now, probably isn't going to go off too much now, seeing as the market reaction as markets have already reacted and it's kind of boring now. But you've also got that there too, right? Okay, so the VIX is going down. Let's see what the S&P. Somebody did ask about question about the S&P 500. So let's have a look at the NQ as well. I think it was the NQ. Somebody asked about that, but probably see some nice move to the upside. Yeah, we did get a little bit of movement towards the upside. All right, there we go. See that? So again, it's the volatility that has caused volatility, and that the fact that the Bank of Canada is actually starting to step down with their aggressive rate hiking path as to something that's seen as a very positive outlook for the global economy, or that, what should I say, is a positive outlook for stock traders, that the central banks in the other central banks might not have to hike that much or be as aggressive to kind of match the Federal Reserve's hiking path. So that's a positive thing that has probably come from that, and as to why we've seen the S&P 500 see movement towards the upside. If we were to get a much bigger than expected rate hike, we would have probably seen the opposite reaction here on the S&P 500, knowing that central banks are still in their aggressive tightening phase and are not looking to let up at all with their rate hiking path. So there we go. So that's the Bank of Canada rate decision. I've put out the link for you guys to join MacroAce, the mailing list. Also, here we go. You also have the Financial Juice Pro link as well for the 7-day free trial, right? So a 7-day free trial of Financial Juice Pro, this feed that we have here, that you can see here. The difference is that they have a live version of Financial Juice, which has adverts, has a delay to the site altogether, which you don't really want if you're day trading and you're trying to capitalize on trades as quickly as you can. So have a go with the 7-day free trial of Financial Juice Pro. See if it fits you, if you like it or not. If you likes it, then subscribe and join up. I don't know why I did that. Anyways, so there we go. Somebody Ali Akbar said, will you cover crude oil inventories? No, I won't be covering crude oil inventories because it's been quite a while since we've had a very decent reaction from the crude oil inventories data. We haven't seen, probably see like maybe a 20 cent or 40 cent move. We're looking more or less for a bigger move, like kind of with the Bank of Canada. If we get like at least like a dollar move, or a nice $2 move from the crude oil inventories, then yeah, I'll cover it if it consistently shows bigger moves. If it doesn't, then I'm gonna stick to staying away from it for now. Michael Alexander said, been using the TickStrike and helped manage dollar Chinese yuan 4K trade. Where? No, wow, nice. Whoa, oh, nicely done. All right. Okay, so there we are. Somebody said there's an error on Financial Juice. Yeah, that's something that. Apologies for that. Sorry for not looking at that message sooner. Apologies for that. Our devs are currently working on that. I think we're getting too popular. There's so many people that just love financial juice that you guys are causing it to go. But that's a good thing, right? But no, our devs are looking at that, trying to get that sorted as best as we can, as quickly as we can with it as well. Hopefully the site should be okay for you now. All right. Thank you very much for joining me. Now, don't forget, tomorrow we have the ECB interest rate decision, right? So we're not done yet. I told you. It's going to be a busy week. We had the earnings last night too from Microsoft and Google. And, we're going to have a very, very tough week. We're not done yet. Let me, what I want to do is I just want to get the video for you guys, or the live stream for you guys. If you're not subscribed to the mailing list, I'll be nice enough and I'll put out the live stream for tomorrow's video for you on here. So at least you can join in. Now the ECB rate decision, I'll be doing that much earlier. That'll be at 7:30 a.m. Eastern time. I'll be jumping on doing a live prep for you guys. But still, Bank of Canada had a nice surprise. Don't really get big surprises from the Bank of Canada. So what's to stop? What's to stop? The ECB doing a bigger rate hike. Who knows? All right, here we go. That's the select. So triple 13 or triple up 13 said is allowed crypto as payment method. If you email Amar a financial juice, I believe it is. As I said, double check with amarfinancialjuice.com. Here we go. That's the email there. Ask him the question. I think it still is. But like I said, double check. That might have changed. So I'm not sure about the payment method for that. All right. So I've put in the link for you as well for tomorrow's live stream, which is there. I've pinned it to. Okay. Other than that, enjoy the rest of your day. Thank you very much for joining me. And yes, as I said, I'll see you tomorrow at 7:30 a.m. Eastern time. Or that'll be 12:30 p.m. UK time. All right. Remember, the rate decision itself is at 8:15 Eastern or 1 p.m. UK time. But for now, thank you very much. Take care and goodbye.